Welcome to North Country Commerce, a business and community service of the Plattsburgh North Country Chamber of Commerce. I'm Gary Douglas, Executive Director of the Chamber, and as hopefully all of you know by now because you've been watching us each week, we try each segment of this program to bring either some topical stories about what's happening in the business community, issues that are affecting business here in the North Country, services that are available through the Chamber. This segment is a little bit different. It really is trying to provide a service to business viewers out there, self-employed people, small business people, folks that might be thinking that they wanted to get into business someday, as to what it takes to get financing for small business, or folks that are in business, financing for expansions or changes in their business that may come in the future. So this is a little different in that sense, and we have some excellent guests with us on this segment to really talk about some of the ins and outs, some of the very basic kinds of questions that folks might need answers to if they're in need now or sometime in the future for some financing for that business or that venture that they have in mind. With us today is Sue Manton, who is our Director of Small Business Services here at the Chamber. Welcome, Sue.
Thank you. And
we're going to touch on, quickly at least, some of the services that the Chamber here can provide, perhaps to help some folks with preparing themselves to go to the other gentleman that we're also going to meet here today. We have with us Mike Bowden from NBT Bank here in Plattsburgh. Welcome, Mike.
Thank you.
Brian Gladwin from Key Bank.
Thank you.
And Randy Beach from Adirondack Bank here in Plattsburgh.
Thank you.
Three of the several good banks we have here in the North Country. In fact, one of the things we're very fortunate, frankly, here in the North Country, there are some communities that you'll go to, even here in our own state, where you'll find that things have really kind of consolidated to one or two banks really actively working in that area. And it's really to our benefit that we have 7 or 8 banks really working in this area up here and engaging in loans. It gives some good competition. It gives some variety of services, different types of banks, different sizes. They have different capacities to do different things, and that's really good. It's good for everyone out there, and good for the North Country. And we're happy to have reps of 3 of those banks with us. Sue, we have some basic services here at the Chamber, first of all, that folks out there that might be thinking of financing might take advantage of, like SCORE and counseling services. Could you just touch on those briefly?
Sure. One of the services that we offer through our office is the SCORE service. And we've talked about that before on the show, so I'll just touch on it briefly. Mm-hmm. SCORE is a group of volunteers, either retired or actively employed, who have experience in business subjects. And they can very often help people to get prepared for their business, to get their business started. And at some point then they may need financing that they would need to see the local bankers for. They also should do a business plan, and the Small Business Development Center is an excellent resource to help them with that part of their application for financing for their business.
So perhaps some of those folks out there, particularly if they're thinking of starting a business, or maybe they just got this germ of an idea, but they haven't developed it yet. It's not quite time yet to go stop in at the bank. But in that case, maybe the first stop might be right here at the Chamber. Mm-hmm. And let us talk it through with you and maybe help you develop that idea and kind of get your ducks in a row and see if it makes sense and when it makes sense to take that next step of actually going out to the banks. Some of the questions that we want to try to cover, one, of course, revolves around just really being successful and being ready at getting that loan from one of the banks here. And of course, folks have in their mind what they want, but really what's important to know is kind of what do the banks want, because you're not going to succeed in getting that financing unless what you're asking meets what they're looking for in terms of what kind of lending they want to do, what are the kinds of deals they would be willing to put their bank's finances behind. Mike, what types of loans would you say that bankers really want and are looking for?
Well, I think before I get into answering that question, I would like to reaffirm what Sue said. Before coming to a bank, and the 3 of us were talking earlier, and we all had similar comments, I think it's very important that you know what it is you're looking for, you know what your business is all about. If either dealing through the Chamber, through the Small Business Division, or through the Small Business Development Center on the Clinton Community College, they will assist an entrepreneur, somebody looking to start a business, helping them with a business plan, background summary, competition summary, things of that nature. Primarily because you only get one good chance to make a first impression at the bank. And when you go in to see any of us or our peers at the other 4 banks, in town that are very active in the lending. You want to have everything together.
Mm-hmm.
And some of the things that you would consider asking a bank to finance would be term loans for equipment, mortgage financing for the acquisition of a building or the expansion of it. If you're leasing space in a commercial building and you've got a long-term lease, the bank would consider leasehold improvement financing over some type of a term basis. You may look at revolving lines of credit to support receivables and inventory. You can look to a bank for vehicle loans for your business. You can actually look to the bank for term debt to expand your business. And I think there may be some other loans that Brian and Randy might address.
Well, I think Mike's covered quite a few of them. The point that I would like to make is that, and I think I speak for Randy and Mike, as bankers, our job is to, at least my job, is to do loans. It's how our bank grows and expands. It's how we support the local community. We balance that need with obviously the need to effectively underwrite loans, to reduce losses, and to meet acceptable levels for our bank. We're in the business to make your business successful if it meets our underwriting criteria. And I think most of the banks here would have really any type of product that you would need in order to fit a specific need, whether you're looking to open a convenience store or lease a facility or buy a piece of equipment, as an example.
Randy, what's the reality of getting startup financing? Someone comes to you and they have this idea for a business. They haven't been in business themselves before, and this is their first time. What are some of those hard realities that you find yourself talking to them about?
I would say startup financing is probably one of the hardest loans to get, simply because the failure rate in the United States is so high on startup businesses, and it's very, when a banker looks at a new business, we look at it with a very fine-tooth comb, to say the least, and you've got to really have your ducks in a row, and everything's got to be absolutely perfect in order to for a banker to make a loan based upon, on a startup business. We're looking for things like superb credit. We're looking for good financial backing. We're looking for some know-how, expertise. We're looking for backup. We're looking for a reserve. Mike, what have I left out?
You're looking for a strong guarantor too, probably.
True.
One of the issues in startup financing, as Randy mentioned, probably it's greater than 90% of all new businesses fail within the first 3 years, probably. Even though the principals have an idea and they work very hard, sometimes they may work 18, 20 hours a day. Financing of a unique idea or a service is very difficult. I think all of us look to the people backing the individuals looking for startup financing. If you can't convince relatives, friends, other people that have known you all your life on the validity of the idea to back it with some initial startup money, then it becomes very difficult. At times, the financing is available with an SBA guarantee, using maybe the city of Plattsburgh, it's a revolving loan fund. Outside the city of Plattsburgh, there's the NCA loan fund. There's services and microloans by the Adirondack Economic Development Corporation down in Saranac Lake. Areas and sources of financing to help reduce the risk to the bank. A bank is working with its depositors' money. It's got to make loans, as Brian said. It's our greatest source of income. But it's not a partner. It doesn't share in any gains in the project or in what the loan is going to accomplish. It's only getting its stated rate of interest as its return, and it has to mitigate the level of risk. If an individual is starting up a business and needs to draw immediately a salary from that business, it's a red flag to the bankers. You've got to be able to get into the business and maybe spend 6 months without pulling any money out of it.
I think also that we talked about it at the beginning of the program. The statement, "be prepared," may sound like an old and commonly used term, but it's particularly relevant when it comes to a startup business. When you come to speak to the bank, you should have a business plan that Small Business Development Center can help you write. Make a good presentment, be committed to your project, and try to get to understand what the bank's perspectives or concerns are. And also, go to more than one bank as a suggestion. Underwriting can be different at different financial institutions. If you're prepared and committed to your project, and the bank is comfortable, I think, with the principles and the project itself, and a lot of other variables that are important to us, we try to find ways to make the deals happen. I think that SBA is a very important part of startup businesses, and if the bank talks to you about an SBA loan, I would suggest to potential business people that they be excited and kind of interested in that type of scenario. I have situations where startup businesses come in, and when you talk about SBA, their reaction may be somewhat negative, or maybe they had heard a bad story about it or something. But I think you need to be committed to your project and understand what the bank needs. And given the incidence of failure in those businesses, we're going to try to be careful, but we do try to make things happen when it's reasonable.
One of the things I heard in there that I know is probably maybe one of the most common misstarts of folks is somehow thinking that they're going to get 100% or something very close to that of everything they need to do the business without having some equity, something on the line themselves. And that really is the case. What it just generally ballpark, I know it's going to vary somewhat, but what kind of equity should somebody generally kind of have up front to even be reasonably within the ballpark to be asking somebody else to come on board?
I would say a minimum of 10%. The more logical level would be 20 or 25%.
Nope.
In terms of equity positions, in terms of the entire cost of a particular project, would be a normal equity level. That's the type of equity level that we look like in existing businesses, who can be very good clients of our bank, who want to buy a piece of machinery or expand. Those are the typical loan to value, so to speak, ratios that we would look at in financing existing companies. So it would certainly be the same, perhaps more in some cases on a startup.
One of the reasons on a startup business there may be greater equity, and sometimes beyond the equity, it's having reserves, having certificates of deposit, having relative certificates of deposits, is because although you may have financial projections, you don't know how accurate they're going to be, and the bank doesn't know exactly what will happen in the future. An existing business, you use historical financials, which gives you an indication of the future. It's not a guarantee, but with a business, you may guess at a level of sales you think you're going to generate and then work your expenses off of it. If you don't meet the sales, then you'll have a difficult time making your payments.
One of the misconceptions that I've run into recently with startup businesses has been the attitude that, well, I've got a brand new business, so I don't have any credit history, so it isn't bad. That's really not the case, because the bank is going to look at the individual's credit history, and that can very easily make the whole thing go away, because it's so important that your credit history is, we're not looking for a good business credit history, we're looking for a good individual credit history, because that's what we're basing on. We're basing it on your character and your willingness to pay.
What about the situation out there, maybe where somebody has something like a bankruptcy in their past or something, but maybe they have a good business venture idea? To what degree can they overcome that? Or what would it take to overcome some past problems? More equity, or what would it take to get them in the door?
Sometimes it'll depend on when the bankruptcy, how long ago it took place. It also, and the reasons for the bankruptcy can be an important factor. But I would say probably the best thing that an individual can do is to get somebody to invest with them and to come in as a partner, and with some capital and with a good credit history behind them, and that'll certainly improve their chances of getting a loan.
What about appearance and presentation when somebody approaches you? What sort of a factor is that in terms of making a professional business like appearance and presentation, or is it? Is it really just the numbers?
It can be both. I think the numbers, the financial information has to be there. Certainly, from the standpoint of presentment, an individual who comes across very well, impressive, knowledgeable, understands the business plan that they've written, and just generally leaves a good impression on the banker, I think is important. That combined with a good financing package is probably going to get you a little bit farther than if you weren't prepared and didn't bring across a good image. You know, there is an instinct to our business. The financial aspect does have to be there, but let's face it, there are a lot of bankers out there who have, for lack of a better statement, rolled the dice on certain businesses, and those businesses have turned out to be very successful.
Mm-hmm.
So instinct is important, and if you're well prepared and make a good impression to me, it's certainly not going to work against you. In most cases, it would help.
One of the I think important things to remember, and you said appearance. If you're dealing with a craftsman, a tradesman, a contractor, I don't think it's necessary that he come to the bank in a suit and a tie. I don't think any of us expects that. In fact, if they do, then they're not out producing. But I think one important thing that maybe yourselves, your viewers, some of our customers don't realize is that the lenders are nervous. When somebody is coming to the bank with a package of financial information and a plan, they're presenting the bank an opportunity to do business, and that's what we're here for. We may only have 30, 45 minutes, an hour spending with the individual, and then we're reviewing numbers. The competition is very strong in Plattsburgh. These guys are good friends, but they're fierce competitors. And we all realize that if we don't make a good first impression on a potential borrower, that he can walk down the street and knock on either of their doors or some of the other banks in town. And I guess I would caution not for anybody not to be overly nervous. They're talking to another business person who's looking to make a sale, the sale being the loan, and to present their project effectively, answer the questions honestly. One of the things we're trying to gauge is if you know what's in the business plan, and we'll ask a lot of questions trying to get that comfort level. If you don't know the answer, it's better to say so than to fabricate one. It's better not to hide the risk in the project. You may explain why you can accept them in ways that you've decided to mitigate them. And if you're presenting something to the bank, if you've got a lot of exhibits, tax returns, financial statements, marketing studies, you've got a business plan from out at the Small Business Development Center, you've got resumes, and any number of things and brochures, you may want to just put it in a notebook with an index, and you may want to include just maybe a 2-page summary or overview of what the project is so that the lender can in a few minutes grasp what it's about, make the most of your time at the bank, and then have the exhibits to refer back to later.
Let me start with Randy and invite each of you to kind of jump in with your perspectives on this. What would you say right now is kind of the state of the market here in terms of commercial lending? We know these things kind of go through ups and downs, and there are things that happen out there, whether it's the closure of a base or other factors that happen that may tighten up or loosen up the flow of money into an area. What is the state of commercial lending here at this time?
From what I can see, there's some activity. I don't think it's anywhere near as much as any of us would like to see. We'd like to see it a lot heavier. Recently I've been seeing quite a bit of new and small businesses trying to make a start up, and which is always those are the tougher loans to do. But I certainly haven't seen lately as much of the normal equipment purchasing, buying the buildings, et cetera, that I've seen in past years.
Right.
We've seen this year has been a good year for the bank, but a lot of the growth is what I would refer to as vertical growth. existing companies, existing clients who are doing a small expansion, maybe have greater working capital needs, purchasing new equipment, real estate, those types of things. As far as new business activity in the market, we continue to be reliant upon Canadian companies looking to expand here. That has been a great source of potential business for the banks. I think if you look at outside of those two boxes, so to speak, my existing client base and the Canadian interest, I don't see a lot of economic activity in the market. I think that whether it's a car dealership or perhaps some type of service business, I think we start to see now the impact of that base closure. So I think it hasn't affected our ability or our desire to lend money in the marketplace, but I think you have to be a little bit realistic, and I would not, although we've had a great year, I would not define this market as vibrant in any way from the standpoint of the economy. I mean, it's clicking along at a decent pace, but it's
Not a boom market,
No, it's
huh?
not. It's been difficult.
It adds something to the challenge of folks out there looking for a loan
Sure.
to support that and show that it makes sense.
Well, I can't say then that it's an up market. I wouldn't contradict them, but maybe it's important to say that if it's slow or flat or declining growth, depending upon how we want to interpret, and our bank is pretty consistent with Randy's bank. We're not having as great a year as Brian is having. But more importantly than the amount of loans we're booking is what's the bank's feelings about the area? Is there concern that it's flat, that retail is I don't know if it's tight or down, but obviously it's been impacted. The airbase, both with the closure and with all the efforts that are going on to develop it. And I would go back to 3 years ago, 3.5 years ago, when it was announced that the base was closing. Within 3 weeks after that announcement, the three of us, as well as the other bankers in the area, met with Gary, representatives of the city of Plattsburgh, the county. We all affirmed our confidence in the area and our support. I would say that the Clinton County region is extremely lucky to not only have the banks they have up here, but to have the quality of the senior management and the lenders at all the banks that have been here for a long period of time. They haven't just come to town. They have the confidence of their main offices. They have a lot of local autonomy. They get the feel of the pulse of what's happening here. And I would think, I speak for all three of us, that we're very confident on the continued Canadian trade. Eventually, the exchange rate's going back up. Everything is in cycles, and the retail will be going back up. The opportunities that either on the base or within the city or the town of Plattsburgh, of the expanding industrial base, it's all the ingredients are there that we're all in a holding pattern. Again, other than Brian, had a great year. But I think one of the important considerations is we have good delinquency, which is a benchmark. We have people that are keeping their payments current, not only commercial, but on mortgages and consumer debt. And that's the underlying strength of an area. And I think, take a stock market term, we're all bullish.
And I'll tell you, this is a great opportunity for me to affirm that. Mike referred to that meeting, and we all remember what a shock that was, that decision that went against everything we thought was going to happen. Suddenly something that been with us for 40 years was going away. And one of the greatest fears we had was kind of making sure we kept the psychology of the community stabilized, that we could weather this, but you got into a psychology of gloom and doom. So that psychology can become self-predicting, because then people end up performing and making decisions based on what they think is going to happen, that maybe if they hadn't fallen into that trap, things would actually be better. And we convened a meeting, I remember it was at Howard Johnson's very shortly after that decision, and all the bankers were there. They all turned out. And the thing that we most wanted to do, when we had numbers prepared, the city and the chamber went out very quickly to try to do kind of a quick down and dirty assessment of what the real impact of the base was, because nobody had really, truly done an impact figure. And we were actually surprised. We found it was going to be about 4 to 5% of the economy. And I think those numbers proved not to be too shabby as they've played out over the last couple of years. It's a 5% hit you didn't want to take. And some people got hurt, but it wasn't 30 or 40 or 50%, as some people maybe first thought. And I give the banks in this area a lot of credit because they all sat around that table. We all kind of had our fingers crossed. We were waiting for one of them to say, well, my home office says we're just kind of shutting things down up here. We think things are going to be terrible. And if a few banks had done that, if commercial and other lending had just kind of shut off, it would have really been devastating to that psychology. And not one of them did that.
Nobody said that.
They all sat around and said, no, we feel very good, and we're here for the long run, and this is a hit, but this area has a good future. And I'm happy on behalf of the Chamber to have a chance to say thank you to all of you.
And they were right.
And they were right. They were right. But it would have been very easy, particularly for some of our banker friends whose home offices actually are off someplace else and don't really know this area. But thankfully, we had good folks in the offices here, giving them the right guidance and making them see that this wasn't the end of the world.
That's right.
There was a lot else going on.
Mike made a lot of very important points, and if our managers, senior management, have faith in us in the field, that's extremely important. We understand the marketplace, but there's another factor that, Mike, you had mentioned very, very quickly. We can do the best job we possibly can, but if we saw significant deterioration in our loan portfolios, there would be real hard issues that we'd have to deal with, and we have not seen that. We've seen the portfolio hold relatively strong.
And part of the reason for that, and you take all the numbers that we look at and the projects we evaluate, the underlying theme, we all look at the character of the principles behind the business, whether it's a corporate entity or a single person proprietorship. And the quality of the individual is really the most important thing and the ingredient for success.
Sure, because particularly a small business venture, you're really lending to a person.
Sure.
That's right. In the end.
That's right.
Well, there you have it. Small business financing. It is available. We have plenty of banks up here, and they're willing and ready to lend under the right circumstances. And really the challenge is to, if you have an idea, or if you're in business and you're thinking you have some future need for expansion or whatever, make sure you have your ducks in a row, and make sure you have your numbers well thought out, make sure your background and situation is appropriate, that these folks can be comfortable and secure in supporting what you have in mind, and take advantage of some of the services that are there to help you be prepared. We've mentioned here at the Chamber, use us as a first line of contact if you want. And Sue here would be happy to talk with anyone out there anytime, go over what it is you have in mind, hook you up if it's with the Small Business Development Center or a SCORE volunteer, if you need to think that through and develop it further, or just other forms of assistance along the way, as we've said so many times in the past. It's 563-1000, and we're always happy to be kind of that first line of contact and that first source of assistance. With that, thank you for watching North Country Commerce, and be sure and tune in future weeks as we examine other topics of interest.